Welcome to Bunex Investment Group. In this video, we are going to talk about a powerful trading strategy, and those who master this particular trading strategy will see results in their trading. So basically, we say trading requires us to plan our trades, meaning that on Sunday evening, depending on where you are from in this world, you need to sit down in front of your computer to plan your weekly trades. We say if you fail to plan, we've planned to fail. Basically, if you enter a week which you haven't planned for, you are deemed to get many wrong trades. So this means each week beginning, we must plan the whole week outlook so that we may have an idea of when we will get an entry as well as how many trades we may get. So in this particular lecture, we will talk about the midweek reversal trading strategy, which includes counting of levels, day of entry anticipations, then patterns and entry. And last but not least, which is the most important part you need to see, are the market examples. So firstly, we need to define levels because that is the basis of every strategy that we talk about on this channel. Levels are impulsive moves issued by the involvement of the market makers in the markets. So we are saying levels are basically impulses that we see on the charts. They actually signify involvement of the market makers. They can be crudely defined as days of rise or days of drop. We are saying we can say these impulses are equivalent to days of rise or days of drop. That is if we are looking at them on the H1 time frame. So 3 levels in one direction actually makes what we call a market maker cycle. So if we have level 1, level 2, and level 3, we actually attain what we term a market maker cycle. And when we reach third level, which is basically the last impulse in the market maker cycle, whilst we are at midweek, it is a pristine confluence. When we see that happening, it's actually a pristine confluence. So make sure you stick up to the point where we'll talk about the midweek point. So if the higher time frame levels are not yet complete, for instance, we can safely say one H4 level contains 3 H1 levels. So if we are going to get 3 H4 levels, we mean we are going to get 9 H1 levels. So if the higher time frame, say the H4, is not yet complete, we'll get a reset, which is basically a cycle restart point. The cycle restart point will also last 3 levels. It's basically a restart of the market maker cycle. And if this occurs or coincides with the midweek reversal, it's also a pristine confluence. So we are just going to have a rundown of how to count levels because it's actually a skill that we require when using the midweek reversal strategy. In price action terms, levels can also be defined as advanced market structure concept. From a point of reset, we expect higher highs or higher lows or vice versa. However, this structure is issued in threes. We are saying when we break the high or when we break structure, we are actually entering a level. Therefore, if we have something that does not break, like in this case, this cannot be a level. A level should break the high of the previous level for us to actually deem it a level. Here is the most important part of our lecture, day of entry anticipation. We say a month has 20 trading days, but only a few are tradable. Usually Mondays and Fridays are difficult trading days for this strategy. So we focus on the midweek days, which are Wednesday and Thursday. So the entry principle that you are going to use when using this particular strategy states that when a cycle completes on Wednesday, meaning that when third level coincides with Wednesday or Thursday, expect a multi-session M or W. Or when a reversal was issued before Wednesday, expect a midweek M or W reversal pattern as a reset. So basically we are saying peak formations are strong when they are traded off midweek, or resets are strong when traded off the midweek as well. So let's now go on charts, but before we do so, please join our 70 to 80% accurate monthly signals via the link that I'll leave in the description box below. Alright, so we are going to illustrate everything that we were talking about on USD against CHF. It's unfortunate that I do not have my day marker on this particular MT4, but I'm just going to pick the points or the points where we were going to make our entries with higher probability. So we've said we need to have 3 levels to the upside for us to actually get a proper point of market entry. So in this particular case, we had level 1 to the upside, as I've showed you. Then we've said we need to break the structure or the high for us to get level 2. So basically level 2 actually initiated at the lows of this consolidation, which was actually this, to break the structure and gave us this day of rise. And then we had the last level to the upside, which is this one. So from that level, we were expecting to see a midweek reversal pattern. If we are to check on the days that this ugly pattern was issued, we can see this was 22nd of January 2020, 2023. We can actually see it was on Wednesday. So basically this was the first point to make an entry. We've said before we continue, or if we see another a potential rise or continuation of the market maker cycle on the higher time frame, we need or we expect to see a reset. So basically we had the first set of 3s that was issued at this particular point, and now we were now waiting for a reset. And we've said a reset that occurs on coinciding with Wednesday or Thursday. This was Wednesday. The first thing that you do is you put a horizontal line for a possible retest of the second leg. So this was Wednesday, Thursday, and then they issued this particular leg to go to the upside. Therefore, we can safely say this structure was issued on midweek reversal. Then this one, it was actually on the 14th of February on Valentine, which was actually Wednesday, and the second leg actually was issued on Wednesday. This was after 3 levels were issued. How did we count those levels? We can safely say we had the first impulse to the upside, which was this one, and then we had consolidation that broke the high of the first impulse, second level, and then we need to break the third the high for us to get the third level. So the levels were like this, where we had first level, then breaking of the first level, and then the last day of rise like that, coinciding with Wednesday to the upside. So what are we saying? We are saying the midweek reversal will require you to know points of market entry, which are third level or reset points. If these reset points occurs on the midweek days, we are good to enter without fear. On that note, we've come to the end of this video. Thank you for watching. Like and subscribe, and I'll see you in the next one.